The JSE All Share Index has been trading slightly higher, around 70,500 points. That was an early trade after two consecutive sessions of losses. Investors have been digesting the U.S. Federal Reserve's decision to raise interest rates while striking a less hawkish tone regarding future hikes. Matete Tulare is head of foreign exchange execution at Rand Merchant Bank. Joins us now to talk about this and other stories today. Matete, always good to have you on Daytime Updates. Let's start here. The Rand was at least expected to continue with a rally after jumping more than 2%, it was, against the dollar yesterday. How's it doing now?
Good afternoon, Tamigila. I suppose, the Rand has given back some of the post-Fed gains that we saw last night. I mean, obviously, after strengthening the most in the emerging market space behind the Russian ruble, now this Fed has spurred really good Rand gains. And I mean, last night the markets really digested what the Fed said in terms of their decision to raise interest rates, whilst they actually struck a less hawkish tone in terms of future rate hikes. Now, Jerome Powell, who is the Fed chairman, I mean, he has ruled out large aggressive interest rate hikes for the year. As a central bank out in the U.S. obviously is looking to contain inflation whilst without triggering any sort of economic recession that would obviously, leave the markets with a lot of uncertainty. And in my view, we can start talking about the Rand potentially returning back towards the 1550 levels. I mean, just a week ago, we saw ourselves, even on Monday, we just saw ourselves touching highs of 1618. So, we've retreated a good 60 to 70 cents, and I think that move has been exacerbated. And I think now over the next few weeks, we should start seeing the Rand drifting lower. However, this move is unlikely to be a straight line. I think the risks are still high. I mean, we do know that we've still got the geopolitical tension out in Eastern Europe. We've got the local issues with regards to the electricity supply. And I think we've also got a lot of jobs data and also the local Reserve Bank meeting also later this month. So year to date, we have seen the Rand lose about 6% against the dollar. And obviously tomorrow we do have the jobs data out of the U.S., which is expected tomorrow afternoon. That could also give us a bit of direction as to how the Rand also fares into the start of next week.
Mm-hmm. We've also got these oil prices which have edged higher today, and they've extended gains from a previous session. What's driving that sentiment?
So look, there's quite a lot on the oil front. I mean, obviously we've seen the oil prices rally above $110 a barrel. This is ahead of the OPEC Plus meeting. There is supply concerns after the European Union obviously proposed new sanctions against Russia. This would include an embargo on crude for 6 months. This is on top of them potentially thinking about sanctioning Russia's top bank in a bid to deepen Moscow's isolation. Now, if this is approved, the oil ban would be the EU's strongest move against Russia. And this is against the strategic energy sector that obviously helps Russia finance its war, but it will still not be, able to touch the huge gas exports that Russia has. And obviously the other thing that we need to think about is that within a year, Russian oil imports are in its toughest move yet. So obviously this meeting ahead today is also going to be really interesting, especially around the expectations that the OPEC Plus is, will maintain the policy of a gradual increase in supply and settle for potentially a raise of around 400,000 barrels per day going forward from next month. I mean, meanwhile, you are looking at countries like Japan. They've said their country will find it difficult to immediately impose a ban on Russian energy supplies given the limited resources available to the likes of Japan. So it just shows you there's a lot of moving factors, but obviously it will be very interesting to see how the OPEC Plus meeting goes later today.
So in short, for your next birthday, a petrol or diesel voucher will do.
Very much so.
Let's talk about Goldfields Limited. Operational update is out. That was for the quarter ended at the end of March, 31st March 2022. Are they laughing to the bank?
Well, look, I mean, a lot of the gold counters are really laughing to the bank. I mean, they've printed quite significant numbers. It's not only them. We've seen the likes of Sibanya, etc. Goldfields, they've reported a 7% increase in the first quarter production, whilst they have also flagged the important word over the past couple of months, which is the rising cost of inflation. I mean, they have said that output for the end of March this year. That rose to about 580,000 ounces from 540,000 ounces earlier last year in the same period. South Africa, Australia, Perugia, those operations, they've increased production, with only Ghana, the Ghanaian operations reporting a slight decline, down about 5% in terms of production. But also, the high commodity prices have driven inflation, increases in energy costs, logistics, and consumables. Now, we do know that there's a project out in Chile, that they're embarking on. That faces a lot of capital expenditure overruns, and they're estimating that to increase to about 7% owing to this big word, inflation of late. And, once developed, the mine out in Chile, that is expected to produce about 450,000 ounces of gold equivalent over the next 7 years. And I think just speaking to some of the guys there, they do say that will be the lowest cost of production mine in the group, and it will actually produce the highest grade of ore. So it just shows you that once it comes to the fore, it actually will be benefiting Goldfields, and they will be laughing all the way to the bank.
Quick final one. Met Air Investments has published an update on the impact of last month's flooding in KwaZulu-Natal on its operations. How bad is it looking?
So look, Met Air is a JSE-listed automotive components and energy storage solutions manufacturer, and one of their big clients out in KZN is Toyota. Now, on the back of the recent floods that we have seen there, they've said that their facilities were minimally impacted. Operations had started to return to normal. A major customer of the group, which is obviously Toyota, had suffered the significant damage to their plant, with production suspended for cleanup operations and assessments to be carried out. There is no certainty in terms of when the timing of the production will come back online, but one of Met Air's automotive components production line, they expect a material reduction in demand. Obviously, that will hit their balance sheet, but they have said that they have insurance in place. They have also initiated a business interruption claim, which would limit the impact on that specific earnings segment. So they will work with, obviously, Toyota to support the recovery and any recoupment of lost production. So it's not all doom and gloom. Yes, the floods did impact, but I think they are going to make their way back as soon as things return to normal.
Mata Tuchula, always a pleasure. Thank you very much.